European stock markets are trading lower this morning, with the UK's FTSE 100 index currently off around about 30 points. The DAX in Germany off around about 44 points, and the Euro Stoxx 50 index down around about 15 points. US stock futures are also weaker. The Dow Jones Industrial Average front month's future contract is down around about 32 points, and the S&P 500 front month's future contract is off around about 4 points. In the currency space, the dollar is trading a little lower against its rivals. In the commodity space, gold is ticking a little higher, up around about 50 cents. And when it comes to core government bonds, they're up about 55 ticks, and the UK gilts are also tracking higher, currently up around about 55 ticks also, so reflecting the relatively risk-off mood across financial markets in Europe. Good morning, I'm Ishaq Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on across financial markets today. So, of course, we know that we've just had an 11th hour deal in Washington, ending the political deadlock between US politicians, the Republicans and Democrats. In this deal, it's a short-term fix which will extend the debt limit until February 2014, reopen the US government, which has been partially shut down for over 2 weeks. And the deal was announced yesterday. We saw a knee-jerk reaction in Wall Street where shares rallied quite hard, and that fed into the Asian session. But in Europe this morning, it's a different case. We are actually a little bit more sober versus everybody else, our Asian and US counterparts, because in Europe we're actually a bit more forward-thinking about what's going on here. And essentially what this deal is, when you dig deep into the actual deal itself, is that it's just a short-term fix, a temporary patchwork bandage job before US lawmakers will have to reconvene early next year and go through the same issues, work out the same details. Congress remains extremely polarized, differing on many opinions. It's very unlikely that's going to change in 5 months. So the market right now is extremely uneasy with the idea that we're going to have to see the same sort of political brinkmanship that we've seen currently in 2014 again. And that uncertainty is gripping into investor sentiment this morning, which is why we're selling off. It's also priced in. By early this week, around Monday and Tuesday, we kind of knew that there were some initial reports that we're going to get some sort of short-term fix, and it's not going to be really addressing the real issue. So again, US lawmakers, although they've managed to pull out a deal, it's not one that inspires the market enough to feel that uncertainty is now out of the US fiscal situation. That's very much not the case. It seems like we're going to be dealing with lots of uncertainty going forward. And it's only really going to be resolved if US lawmakers can really get their act together and actually work out a more viable and credible solution to their fiscal situation, rather than just patching it up and kicking it down the road and addressing it later. Also, at the same time, we have to remember that corporate earnings have been pretty poor. Yesterday, we had dull numbers out from IBM and eBay from the US. Also, Black & Decker blaming the US government shutdown as a reason to warn on their profits. This morning in Europe, we had poor numbers out from Mezzo, Remy Cointreau, and also some downbeat numbers from this week. In total, we've had pretty poor numbers from LVMH and other corporates. Earnings season hasn't started off too well for the third quarter. And investors are really taking that on board as well as another reason to take off some of that risk. The only silver lining here is that we are unlikely to see the Federal Reserve taper quantitative easing with the current fiscal situation still somewhat unresolved in the US. So with that in the backdrop, it's very unlikely they're going to start tapering. And at the same time, we've got poor earnings, and macro data is actually pretty weak as well. It's not a as strong as expected. Yesterday's NAHB housing numbers from the US were actually weaker than expected. Today we have weekly jobless claims out from the US, industrial production and the fully fed data, and before that in Europe we have UK retail sales and also Eurozone current account data. That's all for your daily market bite. Tune in for another one tomorrow. Cheers for watching.